Good morning, folks. You probably just heard we are going to be recording this presentation for future viewing. I'd like to welcome everybody. Good morning. We would like to welcome everyone to this morning's webinar. My name is Tracy Bartels. I'm the Executive Director of the Delaware County Transportation Management Association. And we're pleased to bring you today's presentation on pre-tax commuter benefits. So before we get started with our guest speakers, I want to just take a moment to introduce those of you who may not be familiar with transportation demand management as a term to TDM Week, which is our industry celebration of the promotion and education about travel strategies that don't involve the use of a single occupancy vehicle. By sheer coincidence, this week was also Child Passenger Safety Week, which in the safety world draws attention to the correct installation and placement of child seats and harnessing of passengers. So at DCTMA, our TDM programs and our Community Traffic Safety Project are really involved in a lot of things these weeks. DCTMA, we're marking these occasions by offering these subject-appropriate activities, such as today's educational webinar, and a very full schedule, like I said, of infant seat checks all over Delaware County, so you can look that up through our website. But also September 28th, DCTMA will be hosting another webinar, this one detailing the upcoming construction that's going to be happening at multiple sites along Interstate 476. So lucky for us, there's going to be multiple projects going on, but they're all going to be in Delaware County. So you may want to tune in on September 28th to find out what's going to be going on with Blue Route. And while you are on our website signing up for September 28th, please check out our Commute 95 page, which is updated weekly with the lane closure schedules and locations of work and restrictions that go from I-95 from the Delaware state line up to the airport area. So that's valuable information. Now, enough from me. We are going to be on to today's presentation. DCTMA is very pleased to bring you this information on pre-tax commuter benefits. If you don't know or haven't heard of these by now, these initiatives are coming down the pike fast and furious. And those who may not know, the city of Philadelphia recently enacted a TDM ordinance that goes into effect at the end of this year, actually. And here to help us digest that information will be Stacy Bartels from the Delaware Valley Regional Planning Commission. And then we will take a look at commuter tax benefits from a financial aspect or financial perspective with our accounting folks from Brinker Simpson Company, Linda Scafiro, and Alex Jones, our financial specialists, and they will help us understand the business aspect. And then finally, we will wrap up by giving you insight on how the employers can offer a tangible local benefit to your commuters by employing the SEPTA key. And that will be explained to us by SEPTA representative Gabrielle Pristera. Since this is a webinar, and as you follow along, please put any questions in the Q&A because our presenters can't see the chat feature in this aspect. So put your questions in the Q&A. We are recording this webinar for future use, and we will be putting the webinar and the slide decks back on dctma.org for future reference. So right now, first up, I would like to introduce Stacy Bartels. She's the manager, Office of TDM Strategy and Marketing for the Delaware Valley Regional Planning Commission. And Stacy was a team member of the steering committee to work out the passage of the City of Philadelphia's TDM ordinance. And here to help us understand some of that is Stacy Bartels. Go ahead, Stacy. And you are muted.
Good morning, everybody. As Tracy introduced me, I work at the Delaware Valley Regional Planning Commission. We're the MPO, the Metropolitan Planning Organization for the greater Philadelphia area. That's 5 counties in Pennsylvania, 4 in New Jersey. And I've been largely focused on marketing programs that have to do with, getting people out of their cars, finding alternate commutes, and travel in general. We've expanded our approach to TDM in the past 2 or 3 years. It's always been very important to us and has been a component of many of our projects, but recently we have taken to looking at it more broadly, connecting the efforts that go on in New Jersey and Pennsylvania. And so, yeah, we work a lot with our transportation management associations. Couldn't do what we do without them, actually. So up until 2020, we actually also implemented administered a commuter benefit for the region. You probably heard of it. It was Ride Eco most recently. Originally, it was called Transit Check. And it was a program based on a federal IRS regulation, and it allows employees to take pre-tax money for transit expenses and third-party van pool expenses. And that's what I'm going to be talking about today, the commuter benefit. And the city did enact a commuter benefit ordinance, and it just passed 2 months ago. As Tracy mentioned, it goes into effect on December 31st of this year. I'm not sure why December 31st and not January 1st, but anyway, I'll talk just a little bit about that as well. Share my screen. Nope, that is not. So I'm going to start just first for those of you who may not be familiar with exactly what a commuter benefit is. It's a tax break for taking transit or participating in a regular van. It's sanctioned by IRS Tax Code 132F to set aside up to $280 a month. And that is exempt from federal income tax and FICA payroll taxes. And that $280 a month can change year to year. It doesn't go down. It just goes up as a cost of living increase. But right now, for calendar year 2022, it is $280 a month, which for the most part for commuters in our area more than covers the expenses of transit. We're very fortunate that way. It can be offered in various forms. It started out in voucher form, but we don't see a whole lot of that anymore, although they are still offered in some programs. Prepaid debit cards, also transit agency passes and electronic fare cards like key card for SEPTA. And it can be delivered to the home or office or loaded electronically. It's really very flexible. Commuter benefits are considered, this is important, a qualified transportation fringe benefit. So that's what falls under 132F. It's not part of a flexible spending account, and it's not part of a 125 or cafeteria plan. And that's a good thing because the qualified transportation fringe benefit doesn't have as many administrative requirements as FSAs and 125 plans have. So what's not covered by a commuter benefit? So car sharing, and like when Enterprise used to have car share, I don't know if Zipcar still does. That's all kind of up in the air because of the pandemic, but it's not covered. Bike share currently is not covered. Carpooling is not covered. It has to be a third-party van pool setup. Shared use mobility, which is like an Uber or a Lyft, that's not covered unless it is a multi-passenger service. But right now, it's my understanding that Uber and Lyft don't provide those. So again, that wouldn't be covered. Micro mobility, it means like there might be connectors or a corporate shuttle. Often they're not charged if you have the transit pass, but sometimes they charge a minimal fee. That fee is not covered. Tolls, taxis, fuel maintenance, mileage, none of that is covered. It's funny because we always used to get calls at DVRPC from Ride Eco people. Can I use this to pay my bridge toll coming across the Ben Franklin? We're like, no, because it's supposed to be for transit. Alternate to your car. Take PACO and you can use it. And for business trips, that's a business expense, so it should be handled that way. And for residential parking. Quick look, I'll just give you a chance to look at this, but this started to happen in the 1970s, part of actually clean air and environmental legislation. And then in 1984, there was a Tax Reform Act, and it codified the transportation fringe benefit with $15 a month maximum benefit. So you can see how things have changed since then. In 1998, there was federal transportation legislation called T21, and that allowed employees to do this benefit pre-tax. Before, the onus was on the employer to provide it. It was tax-free to the employee, but the employer had to provide the benefit, pay for it. So in 1998, that was a big change to the program. In 2008, more legislation where they added a bicycle benefit. It was only $20 a month, but it was the first time expenses for bicycling to work had been considered. Sadly, in 2017, with the Tax Cut and Jobs Act, that particular option was taken out of the legislation for whatever reason. But the important one in 2015 was that the amount for parking used to be higher than the amount for transit. And that went on for years. But in 2015, they evened those out. So they are both at $280 a month right now. And when they go up together. So they're always the same now, according to that legislation. How can it be offered? Well, it can be offered as a purely pre-tax benefit. And that is handled in terms of, and I'm not the expert here because we have someone who's going to talk to this, but that is handled like you would do a FSA deduction, but again, it's not part of an FSA. And an employer provided subsidy where the employer provides it to the employee, as it initially was required to be done. Some employers do that because they're environmentally focused or because they want to, provide the employee with an extra benefit or extra money in a sense. And that is tax-free to the employee, or it can be in a combination. At DVRPC, we're subsidized a little bit, and then we can take the remaining amount of our expenses for transit pre-tax. And now you can also combine transit and parking if necessary to receive a maximum benefit of $560 a month. And Gabby can correct me if I'm wrong, but this right now, I think parking at most SEPTA stations is free, but when that starts back up to be paid, the employee would be able to use this money to pay for parking as well. And we do see some transit systems where monthly parking, because it is in such high demand, let's say up near New York City, they pay close to $280 for their monthly pass, and they can also pay, over $100, $200 for their parking. So this benefits people who do both of those. Who's eligible? Pretty much per the IRS, that should be IRS, section 132F, employees who receive a W-2 basically is who could qualify, but the employer gets to decide then who they want to allow to participate. So for instance, this new City of Philadelphia Commuter Benefit Ordinance specifies that the employee has to work at least 30 hours a week, so more or less full time, and have been employed by the company or organization in the last 12 months. Some companies will say, well, just like with other benefits, you have to wait 90 days or 3 months until you can get this benefit. That's fine. Some might say, we're going to offer it to our part-time employees because they may need it the most in terms of help and tax savings paying for their transit. So an employer can modify it as needed, as suits their needs. The only exclusions are self-employed people and S-Corp employees, but they can receive what they're now calling a de minimis fringe benefit of $21 per month. Why would an employer offer this? Well, first of all, the tax savings. As I mentioned, both employers and employees pay taxes on this. It can create a more complete benefits package at little to no cost. Sometimes, the savings outweigh what cost is involved in administrating it, and it can actually save an employer money. It could help meet an employer's or a municipality's sustainability goals. It reduces their carbon footprint. It reduces the commuter's stress, and that can help increase productivity. So when you're not fighting traffic yourself every day, you often arrive to, this is per studies, but you often arrive at work a little more relaxed, a little more ready to start your workday. It reduces any subsidized parking expenses, and it frees up parking for customers. We see this with service organizations, agencies, companies like hospitals, actually. They want to save as many parking spaces as they can for their patients and for their clients. So this is a way to encourage their employees to use transit if it's possible. The savings rack up for employees. If you do it purely as a pre-tax payroll deduction, they can realize a savings of more than $950 a year if they do the monthly maximum. And of course, this all depends on individual tax brackets, but in the average is just slightly over $950 a year, which is quite a chunk of change. And for employers, the reduced FICA match, they can see a savings of up to like about $250 to $260 per employee annually. Again, if the employee takes the maximum amount deducted from their paycheck. So that again, multiplied over several or even several hundred employees can make a real difference. And some of the effects that businesses offering a commuter benefit can see and the region can see is we have seen from research from the American Public Transportation Association, and this was pre-pandemic. We're all trying to recover from that in terms of ridership and our commuting patterns and all of that. But 1.87 billion transit trips annually were attributed to people who took this benefit, you know, who had pre-tax money taken out to pay for their transit expenses. Up to 50% of all commuting trips were taken with fares purchased with the transit benefit. More than 70% of those who responded to the survey said it was very important to supporting ridership on transit. The more riders you have, the more likely it is that the transit agency is going to be able to retain service and possibly even up service on certain lines or bus routes because people are riding. And nearly 62% of respondents said that this benefit did have a positive impact on their ridership levels. And what we found from Ride Eco research in 2016 was these employees who responded said overall, 19% said they were new transit riders. So because their company offered this, they decided to take transit most of the time instead of driving alone. And 47% said they're riding transit more often. So for instance, they may not just be using it to commute, they may be using it to run errands during the day. They may be using it to go to events on the weekends, in the evenings. So we see an improvement on both ends there. Some additional considerations when we're talking about commuter benefits. Administrative fees don't usually exceed the FICA savings. So as I mentioned, sometimes it's a wash for an employer to offer this benefit. It depends on what service they're using to offer it. And if they went with a transit agency program like SEPTA Advantage, it's very low to no cost, but usually they make out great. So it's a way to add a benefit without increasing costs in your HR fund. Cash reimbursement is generally prohibited when a commuter benefit is in place in the region and is available. But cash reimbursement is allowed for parking with receipts if needed. That's actually harder for employers to administer when you have to deal with receipts, but it is allowed. It has minimal administration, as I mentioned, a few hours for the initial startup, and then about 1 to 2 hours per month on average to manage it. Because so much is electronic now, it's very easy to manage. And more cities and regions are implementing commuter benefit ordinances. We have San Francisco is on the cutting edge starting in 2006, I believe. And there are probably about 10 to 12 cities that currently have a commuter benefit ordinance in place. Several were actually enacted starting the beginning of 2020. But then with the pandemic, not a lot of activity happened. So we're just now starting to look at how those ordinances are doing. And during that time, we were also working on the city of Philadelphia's ordinance. And that, as Tracy mentioned, starts the end of this year. Their ordinance is for, just in general, it is for employers located in the city, obviously, who have 50 or more employees. The employee has to work at least 30 hours a week, and they have to have been with the company for 12 months, or I'm sorry, within the last 12 months. Again, it's up to the company to put further restrictions on it than that. And an employer with the ordinance, we're calling it a bill, but with the ordinance, they're not required to offer it just as a blanket benefit. only if an employee requests it are they required to offer it. So it's not as much of a burden. You know, some of the employers are like, we don't have this yet. And we're like, it's okay, you have time to get this ready and you don't even have to do it, but it'll be a benefit to the employer if they do it. It took actually, and again, this had to do partially with the slowdown during the pandemic, but we started working on this in 2018 and it switched councilpersons' offices during that time. The Office of Transportation, Infrastructure and Sustainability, Otis at the city, got involved to help spearhead it. And then Councilwoman Helen Gim's office took over. She was very adamant about this benefit. And that's how it got passed this year. And it often requires a lot of back and forth with legal. Obviously, it's good to have a collaboration with folks from different departments. We also have the Department of Commerce involved. We did meetings with the Chamber of Commerce, Greater Philadelphia Chamber of Commerce, to get them on board with this too. And they support it as well. So it's good to have support. It's good to have a champion. I was privileged enough to be able to testify at the council hearing on this. And it went pretty smoothly, even if it took that long to get it implemented. So we're anxious to see how it actually goes as it starts to roll out. But I think it'll be really beneficial to SEPTA rolling out their Key Advantage program too. And that is one way that city employers, especially, but not limited to city employers, will be able to implement a commuter benefit for their employees. So just really quick, step one to implementing a commuter benefit, do your research, check your commuting needs of your employees. How are they getting to work now? Would they consider transit? Do they even have a transit option near their home? Even if your work site is transit accessible, is there a connection if they can't walk to your work site from the closest transit stop or station? Know what the transit options are around your work site. Calculate those possible expenses versus savings. And then obtain management support and approval, which can be a challenge, but usually not. If you go in there with your proposal, being HR or benefits administration, go in there and say, this won't cost us any money, then usually that's okay, we could do that. Assign a department to administer. It varies. It could be your finance department. It could be your benefits department. At some larger organizations or companies, it's the sustainability department, if there is one, and also a champion, somebody or a group of people at the employer who are your champions, the ones who are rah-rah and asking people about, hey, do you participate in this because it can save you money? Then launch your commuter benefit program, and don't forget to continue to promote it. As new people come on board and other people may have changes in their lives, they move, or they don't want to have 3 cars, they're going down to 2 cars. Make sure they remember that there's a commuter benefit in place. And last, you do want to occasionally do a program analysis, get participant feedback, see what you as a company could be doing different, or what you could ask your benefits provider about in administering the program. Something may be able to be changed. Engage the program's usage and effectiveness, because that's valuable to take back to management as well. And as always, we are not tax advisors, so we always tell companies to consult with your benefits or tax advisor just to ensure everything is compliant with the IRS regulation. And that is the end of my presentation. So I don't know if there were any questions. There
was a question in the Q&A. It went away, so maybe someone answered it. But if anybody has any questions, please put them in the Q&A for Stacy. And we can revisit questions at the end of everyone's presentation as well. Thank you so much for that. One mentioned that when you were talking about the administrative, how should I say, it was less cumbersome to administer commuter tax benefits than it would be for an FSA or an HSA. Companies that employ third-party benefit administrators may want to ask or request that those benefit companies come to the table with something from their side on a pre-tax commuter benefit. Because most likely in a big company that's using a third-party administrator, there's something that exists in their platform. So
Absolutely, I agree. And I would say for DVRPC, we do use a benefits administrator, but it's funny because our HR folks actually do this benefit on their own.
okay, see, because it's easy.
Yeah, because it's easy, exactly.
Yep.
And because we're lucky, we're located in Center City, we have a lot of people who take transit and also are able to walk,
Yes.
and a few bikers. So we have people who are engaged with alternate commutes, but still, that's just one way to do it. But there are a myriad of ways to do it, whatever's easiest for your company.
Perfect. Well, thank you so much for giving us insight on where companies can start when contemplating these TDM benefits. So next on, we are going to look at the financial implications. We have Linda Scafiro and Alex Jones, who are joining us from Brinker Simpson Company, certified public accountants. They're going to explain the financial side of a program, what that may look like from a corporate perspective, and provide some insight on how to approach this from your own business. Alex and Linda, if you want to get ready to share your screen.
Just this one, right?
Yeah, I think so. Here we are.
Perfect.
Okay.
Are we on mute?
No, we're good. Hi, everyone. My name is Alex Jones. I'm a manager at Brinker Simpson Company.
Hi, I'm Linda Scafiro, one of the partners here. And as Tracy mentioned, we're a CPA firm located here right in Delaware County. And we're lucky enough to have DCTMA as our clients. And we're very happy and honored to be asked to participate this morning.
Yeah, so we're going to go into some of the pre-tax commuter benefit plan, kind of tax saving side and also the administrative. So first, we're going to start off with that these plans do allow employees to receive pre-tax benefits for commuting expenses. As highlighted earlier too, it's a maximum currently of $280 per month for combined commuter highway vehicle transportation and transit passes, as well as $280 for qualified parking. So the way that this works is you can potentially use a maximum of $280 for both sides of it. So for the transportation passes and qualified parking, it's not one or the other like some other IRS plans are. So this is a combination of the two. In use, these are typically facilitated by your payroll or employee benefit company that you already are engaged with. As Stacy mentioned, some businesses may be able to handle this themselves, but you know, it's not a super complicated plan. So you can run it through your payroll or employee benefit companies just for ease of burden.
Right. I would think that most payroll providers, the ADPs and the paychecks companies would already have this in place. So it'd be seamless for the employer to add this to their current benefit packages.
Yeah, and if not your payroll company, it's very well implemented with your employee benefit plans, especially if you have something in place already, like an HSA or as mentioned, an FSA. There's just a lot less administrative burden on this one. So, I mean, if you wanted to implement this and kind of, you know, put it off of your to-do list, it should be really something simple to do with your payroll or benefit plan companies, basically. So just to get into a little bit of the qualified transportation benefits, these are typically, you know, like we had mentioned too, like bus passes or rail passes. Qualified parking is where it gets a little technical. And as mentioned too, it's not really parking in residential areas. It's more so parking in areas that are convenient to where you work. So, and again, you may provide the employee with one or more of these benefits. So the transit passes as well as parking. The plan types kind of highlight only the compensation reduction agreement. There is a bona fide reimbursement arrangement, but that's not really where you're going to get any of these pre-tax savings benefits. So we don't want to go too much into that, but it is an option. So the compensation reduction agreements is where you're getting that pre-tax benefit for both the employee and the employer. So with that, as we know, it is subject to the monthly limits, which can change from year to year basis. but this is where you're going to be saving on the employer side of your FICA taxes as well as the employee. And when we say FICA taxes, what that means is just your Social Security and Medicare. So the combined rate of that is 7.65%. So the employer benefit with this, really, if you look at it from a dollar savings, it's kind of a simple calculation because it's your combined FICA rate, which is your Social Security and Medicare. Every allowable $1,000 spent through compensation reduction agreements will save the employer $76.50 in payroll taxes. And that's a savings to the employee as well, because then they're not paying that additional Social Security and Medicare tax.
Right. The rate's the same for both the employer and the employee. So for each $1,000, the employer and employee each save $76.50.
Yeah. And
If I can interrupt you guys for just 1 second, I believe you're in presentation mode. Your slides are not advancing.
Oh,
You're not in present, you're in hold. You may have 2 screens open is what I'm thinking.
nope.
Maybe. Is that better?
There you go.
Well,
Just pick up where you were.
Okay, yeah. So now what we were just kind of highlighting here again is just now with the slides on the screen. Sorry about that. Is that this is really just a mutual savings for the employer and the employee. So it's as it comes for employer and employee benefit packages, this is a really friendly one because both sides get to kind of share in some tax savings and also make it easier for people to commute to work. All right, so now I'll change this up.
Is that the end?
I think that might be. Yeah, that's what I have. So, yeah, I mean, we highlighted just the tax savings and implementation through your employer benefit programs and offers already. So I'd like to open it up to any questions that anyone sees relevant or.
I don't see anything in the Q&A, but I have a question that I have encountered from other businesses, and that is when you had mentioned the payroll organization, and in some organizations, the payroll company obviously is different than, the accounting services.
Right.
When you go to the payroll company, what type of information should you have for them in order to, start this or get this going?
Now through a payroll service, first it's just going to need to be communicated to them that you're implementing this program. And then depending on the payroll service provider, because there's a very wide varying level of sophistication and like requirements that certain payroll companies are essentially. So the bigger ones are going to typically be a lot easier to kind of set this up and manage it. If you're using like a smaller payroll company or payroll service provider, you may want to be more keep the line of communication open earlier on, just to let them know what you're doing, so that when it does take effect, that they're ready to start implementing that and making sure that the monthly allowance that the employee is using is not going to be taxed for Social Security and Medicare. Because sometimes we see with smaller payroll providers, you may be able to tell them all this and they may say that they're on board with it, but that first pay period may not be correct. So really it's just a lot of kind of scrutiny upfront and making sure that what you're asking them to do is actually going to go through.
They can do it.
And then, verifying after the fact that amount that was supposed to be pre-tax was in fact pre-tax. This typically is a line item on a W-2. So when the employer gets their annual W-2, there is typically a line item for that, whether it be in 14 or 12, which are just boxes for kind of informational stuff. So that's going to be obviously an annual check to that if you're not really watching it on a monthly or a payroll processing period. But really what you want to do is just make sure that the communication upfront is consistent and clear to the payroll company.
Perfect.
These plans aren't new. they've been around for, I would say, years and years.
As Stacy said,
Since
yeah,
the
they're just
70s.
getting a
Yeah.
microscope now. They're getting a
Right.
lens on them.
No,
So
100%. And I'm gonna say most payroll companies probably already have a program in place, so it would be seamless to add this to your, your payroll withholdings and with your payroll provider.
we had a comment here from one of our sister TMAs in the Philadelphia region, Partnership TMA, which covers a portion of Montgomery County. They have added commuter benefits to their compensation package just this past July with their new fiscal year, and they use ADP as their payroll administrator. So, just, FYI for anyone who is using ADP, we know they have it.
Yeah, and the large payroll providers,
I guess they
ADP,
all gonna
Paychex,
have they're gonna have it.
they're gonna have it and maybe a little easier. It's just sometimes you encounter smaller outfits that process payroll that may have to like add it to their software essentially, but the big guys are gonna have it and understand the process and everything.
Perfect. Great. Thank you so much, guys. Thank you for all of that information. And like I said, the slides with the information are going to be on the DCTMA website. So anybody who's on this presentation or wants to refer some of their HR folks to this presentation, you can go to dctma.org. And now, last but not least, how to tell you or express how to use those pre-tax dollars to offer your employees a SEPTA key plan and all that entails. With us is Gabrielle Pristera. She's a SEPTA key sales specialist, and she's going to explain how SEPTA key program might work for your company. Gabrielle? You need to unmute too.
Perfect. Thank you so much for that. Can everybody see my presentation?
Yes.
Okay, great. Thank you so much. And thank you, Stacy, for talking about the pre-tax, and also to Lynn and Alex. You're definitely going to make my program look a lot sweeter. As mentioned, I am Gabrielle Pristera. I am a senior sales specialist at SEPTA, and today I'm going to talk to you all about our Key Advantage program, which is our newest program for transit benefits. And also at the end, I'm going to talk a little bit about the transit programs that we are currently offering. Okay, like I mentioned, we're going to touch base on the Key Advantage program, what defines the eligible employee, the pricing for the first 6 months, and then how we move to a usage-based pricing model, employee enrollment, how the SEPTA key card is used in the program, and like I mentioned, we'll talk about all the other programs that we offer currently. Okay, so SEPTA Key Advantage is an employer-based benefit program that is offered to all eligible employees. As I mentioned before, the employees will need to use and own a registered SEPTA key card to participate in the program. Employees enrolled in the program will have access to an all access anywhere SEPTA pass, and that's going to be loaded onto their SEPTA key cards on a monthly basis. The Anywhere Trail Pass, if you guys are familiar with it, allows riders to use their ride allotment on all SEPTA services. So this is all of our SEPTA transit, which is the buses, trolleys, subways, and the Norristown High Speed Line, plus all the SEPTA zones in the regional rail system. Oops. So we're rolling out SEPTA Key Advantage in 3 phases. Prior to our first tier enrollment, we actually had a 6-month pilot program with 3 companies in the Philadelphia area. We worked with Wawa, Penn Med, and also Drexel and their employee base to really work out the kinks of the program. And now we're ready and set and offering the program to large companies of 500 or more employees. In 2023, which lines up really well with the ordinance that Stacy was talking about, we're going to begin to offer the program to businesses with 50 to 499 eligible employees. And then in spring 2023, our final tier will be for businesses with 50 or less eligible employees. So like I mentioned, the SEPTA Key Advantage is a true employee benefit. Employers within the SEPTA service region must cover and include all of their eligible employees. It's not an opt-in program. There are decisions that employers can make when it comes to defining the eligible employee population. And the first one is the work status. So employers will have the options to include their part-time and full-time employees or just their full-time employees. They have the option to see what that will look like for them. And if an employer has multiple work sites within the SEPTA service region, they can choose to offer it to just one location, some of their locations, or all of their locations. And within that employee population, there are exemptions that we have defined, and they can be excluded from the total eligible employee population. The first one are employees who have been deemed to permanently be working from home. They can fall off that eligibility population. And then PA residents over 65 can be excluded as well. They already have the senior pass, so they can use SEPTA for free currently. So we'll talk a little bit more about the rules for use of the program. The All Access Anywhere Pass, it can't be transferred to another person, and it can't be refunded to the employee. This is just to make sure that the employee that actually has the pass is using the pass, and it's only for the eligible employee. We need to make sure that anyone enrolled in the program puts those participation rules in place in their company policy. And we're also agnostic to how it comes to paying for the passes. So you guys can choose if you want to do like a cost sharing with your employees. Our pilot companies did opt in to cover the full cost of the program for their employees, but again, it's up to you guys. And like Stacy mentioned, anything that the employees contribute to the program can be used with pre-tax dollars. And this is the most important slide, I think, and it talks about the pricing. So for our tier 1 employers, which are those large companies with 500 or more employees, their first 6-month contract price point was $160 per employee, which works out to be a little bit less than $27 per month per employee. Around the 3-month point of the contract period, SEPTA is going to look at all of the trip history for the participants of the employer. We're going to tally up the transit trips, the regional rail trips, and times it by the at-cost price for SEPTA to generate the price for the next 6-month period if the if the employer wanted to continue with us. This will make your price more accurate to how your employees are using it. So if employees are using it less, your price is going to go down, and vice versa if your employees are using it more frequently. With that new contract pricing, we have guardrails in place to protect us and you guys as well. The price cannot decrease or increase more than 10% to help you guys plan for your upcoming fiscal years. Okay. And to enroll in the program, we mentioned this a little bit earlier, but employees need a valid registered key card to participate. They can use a current key card if they have it, but if they do need a new card, they can visit a SEPTA kiosk, a sales window, or a retail location to purchase a key card for $4.95. Employers also have an option to purchase key cards in bulk in quantities of 100 to be shipped to the address that we have on file in your partner portal. Okay. And now we'll pin the Advantage program, and I'll talk a little bit more about the SEPTA Key corporate program that we have. It's a transit benefit program, just like the Advantage Pass program, and it offers the option for employees to link their SEPTA key cards to the admin account with their requested pass product. Admins will approve or deny the request and place the monthly orders. Employees can choose from all SEPTA monthly pass products or the SEPTA travel wallet to load to their cards. These products can be purchased with pre-tax dollars as well. We also offer a discount option on the monthly passes. So employers can enter into agreement that that they pledge to offer at least 5% off the passes to their employees, and SEPTA will discount the pass at 5% to the employers. This will be at least a 10% discount to your employees on the monthly passes. And the last program I'll talk about is the Partner Pass program. And this is for nonprofits, eligible groups, and government agencies. The Partner Passes are disposable fare media that can be purchased in bulk on the Partner portal. We have the 6 options for Partner Pass products available here. And that concludes my slides for today, and I am ready to answer any questions that you guys may have. I'm trying to find my questions. Oh, okay, no questions.
I have a question. I didn't put it in the chat.
Sure,
Um,
that's okay.
So it's about the PASS program,
Okay.
and it may be more of a comment than a question. We actually had some of our local municipalities looking into the ability to purchase passes that they would use for events that they were having. So, for example, Media Business Authority was looking at the ability to purchase bulk level passes for a Dining Under the Stars promotion. That kind of fizzled for this year, but still on the books for next year.
Okay.
We also had, and I forget if it was Middletown, Newtown Square, who was trying to get, how should I say, residents from the eastern side of the county into one of their events. And they were looking at purchasing, hey, if we can distribute the key passes over here, maybe, you know, at no charge, maybe those folks. But one of the things that to also mention is that when you have those key passes from a nonprofit, you can't resell them. So it's not like where boroughs or nonprofits can go offer them for sale to their people. You have to give them out as pass users.
Correct. Yeah, that was something I was definitely going to mention when responding to that question. If you guys would, I assume that this would fall into the eligibility, but I don't directly manage the program, so I don't want to go ahead and give that authorization, but the partner passes, like you mentioned, they cannot be resold. So if they were going to distribute them as like a perk and to make the whatever program that they're running more attractive, it sounds to me like that would be okay.
Yes.
Perfect.
Thank you so much. I don't see anything in the Q&A right now. So thank you all at this time. If we don't have any questions, we're going to go ahead and close the webinar. But like I did mention, we'll get our slide decks from our speakers and we will offer a recording and a link on this. This has been such incredible information. Thank you guys profusely for taking time out of your day to join Delaware County Transportation Management for our TDM Week seminar. Thank you for your participation, and thanks to our attendees who will hopefully go back to their respective companies and call us in.
Thank you, Tracy, for having us.
Thank you. Thank you, everybody. Thanks, Gabby, and thanks,
Thank you
Brinker
so
Simpson.
much.
Thanks, everybody. Bye-bye.
Have a good day,
Bye-bye.
everyone.
Bye.